Good morning. This morning I'm going to be talking about Euro Swiss. Now, I've been building a short position in this cross currency and it still offers quite a good setup going into today. I'm going to break down the time frames to highlight why I've come to that conclusion. Now, the monthly chart, we've got a 38.2% pullback level around about 115 the figure, and we can see that the last 2 months price action before this month have posted doji style candles, which highlights indecision. Now if we go to the weekly chart, here we can see that we've got a 261.8% extension level at 116.12. Although we broke and moved higher through that Fibonacci extension, all of last week's initial rally was overturned, and again we've posted a doji style candle, this time on the weekly chart. If we look to the RSI, we're now starting to move lower through these overbought extremes. The daily chart highlights an ending wedge pattern. This can actually be seen with bearish divergence, which gives it a bit more credence. Thursday's price action posted a bearish outside day, which also offers a downside bias. Now we've got some trendline support very close to 114.50, and that's going to be our first target level. If we break down to the 4-hour chart, the intraday chart, this highlights a very impulsive move to the downside, a corrective move higher yesterday. Now we look for that corrective move to be forming a right shoulder of a bearish head and shoulders pattern. So this being the left shoulder, this being the head, and now this being the right shoulder. We've got neckline support seen at 115.50. So the call today would be to break that neckline support, so to sell a break of 115.50. The stop can be placed at 115.90. The first target is 114.60, which is just in front of that trendline support, and a break there, and we look for another move lower to 114.20, which is just above the measured move target for this bearish head and shoulders pattern.